Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for a continuation to the upside in a wave C or a wave 3. The common target area for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the low to the high of A to the low of B, giving you a target area between 69.1k and 71.3k, and the wave 3 commonly extends to higher prices where the 1.618 is usually a minimum target for a wave 3 at 74.7k, which would mean new all-time highs. We do have some additional resistance to the upside, the blue boxes on the chart. First of all, 68.2k, 69.2k, 70.7k to 72k, and then finally 73.1k to 73.6k. After a wave C, we want to see a move towards the downside, looking for the lows at 56k, and of course for a wave 3, we're looking for price to continue its way towards 100k. If we then zoom into the 1 hour time frame, we are looking for a 5-wave impulsive structure inside that wave C or that wave 3, and here we're then looking for a wave 1, 2, 3, 4, and a wave 5. However, if this is already your wave 4 compared to this wave 2 here, the probabilities are higher that this move towards the upside is a wave 5 and therefore a wave C instead of a wave 3, because for a wave 5 it's going to be quite difficult to reach all the way up to 74k. Common target area for your wave 4 is between the 236 and the 05 Fibonacci taken from the low of 2 to the high of 3, giving you a target area between 65.3k and 63.8k. The invalidation for this scenario is price moving to the downside, hitting the high of this wave 1, because that's not what you want to see in an impulse. Overlap between wave 1 and 4 is not allowed. A detail is that the low over here has been made before the 1-to-1 fib time, taken from the high to the low of this wave 2 and put on top of the high of this wave 3, comparing this wave 2 with this wave 4. Most commonly, a wave 4 is longer in time compared to your wave 2, meaning you would like to end the correction after the 1-to-1 fib time over here, where the first structure can be a flat in a potential W, get another X, eventually a Y, for a bigger 3-wave structure, and then move towards the upside for your wave 5. Locally, we also have some resistance to the upside, which is this blue box here between 66.1k and 66.3k, and pretty much the only real area of support is the daily naked point of control that we have hit over here. Below price, there is not too much going on with regards to support. There's a couple of lines I have here on the chart which are very low time frame volume profile pulls with the value area highs or value area lows and point of controls, but the daily naked point of control is by far the strongest area of support. On the 4-hour time frame, the bearish but eventually bullish scenario is an unfinished wave B or 2, as we are then looking for a bigger 3-wave structure, after which we expect continuation to the upside. Common target area for your wave 2 is the golden pocket to the 786, taken from the low to the high of 1, 60k to 58.4k, and for your wave B it also includes the 886 at 57.5k. Invalidation is price taking the low, and preferably this wave B or 2 is finished before the 4 and especially the 5 fib time, as then probability significantly go down for a wave 2 or a wave B, with the 4 fib time sitting on Sunday the 26th of May 10 a.m. Central European Time. Inside this wave B or 2, we're then looking for an expanding flat, 3-wave A, 3-wave B, 5-wave C to the downside. Common target area for your wave B is between the 1.236 and the 1.38 Fibonacci, taken from the high to the low of your wave A, giving you a target area between 66.7k and 67.6k. At the moment, price has just missed out on hitting the 1.236 by a few dollars, so it actually would be nice to hit that target area, and we also have a triple top at 67.2k. In this scenario, we are then looking for an impulsive structure to the downside, 5 waves, moving below this wave A, after which we look for support and continuation to the upside. Inside this wave B, we then want to see a 3-wave structure to the upside, which then in this case is labeled a zigzag in a 535 ABC, with the potential for your wave C to be finished and this move to the downside to be a wave 1, 2 for a bigger wave 3 towards the downside. However, there is the opportunity for your wave C to still get one more high. The 1.618, however, is still a common target area for a wave C, taken from the low to the high of A to the low of wave B, which, as you can see at the moment, is nicely respected. If we then go to the 15-minute time frame, then locally we see this grind towards the upside after hitting the daily naked point of control at 64.8k. If this is a bullish impulsive structure to the upside, we have to count one of three structures: an impulse, a diagonal, or a double 1-2. In an impulse, we're looking for a 5-wave structure to the upside, where we don't want to see overlap between a wave 1 and a wave 4, but as you can see, it's very sideways. There's a lot of overlap here, so the probabilities for an impulse are not high. Then we have a diagonal structure in a wave 1, 2, 3, 4, 5, which is a possibility, but too early to call. I only really like to think about diagonals after a wave of 4 is in, which then brings us to a double 1-2 in a wave 1, 2, 1, 2. However, these moves towards the upside here on the lower time frames look more corrective, 3-wavy, instead of impulsive, lowering the probabilities for a double 1-2, increasing the probabilities that this price action to the upside is corrective, which can fit with both the bullish and the bearish scenario as well, because in the bullish scenario, preferably, you do not end your corrective structure here. It's only the beginning of potentially a bigger W, X, and then a wave Y, finishing your wave 4 at a later stage after the 1 to 1/5 time, after which we look for continuation to the upside. And in a wave 2, we're of course looking for a wave 1, 2, and a very big wave 3 to lower prices. We do have some bullish CVD divergences on the chart: higher lows on price, lower lows on the CVD, which can be seen over here. Higher low in price, lower low on the CVD, both on blue and yellow, increasing the probabilities for price to move up. It took the high over here, so this bullish CVD divergence has played out. And then as a price was moving to the downside here, once again the yellow line is below the yellow line of this green pivot. You can see over here higher low on price, but again a lower low on the CVD. So that is once more a bullish CVD divergence on the chart. It has to be said that it is the second CVD divergence with the same pivot, and the more CVD divergences you have with the same pivot, the lower the probabilities of it playing out. And if we then talk about the probabilities of the different scenarios, then on the 4-hour time frame, the probabilities at the moment are quite neutral. We did miss out on just hitting the target area for your wave B over here in the bearish scenario for an ABC, and of course the target area for your wave C is a little bit higher. So it would be nice for price to still actually physically hit that area and potentially take the triple top, but it depends on the price action that we see locally. And on the 15-minute time frame, currently the probability are higher to continue this local range in a potential wave 4 WXY, or a wave 2 in a 1, 2, and then a 3 towards the downside. The range would be between 66.3k and 64k, and so far the probabilities are higher that this move towards the upside here is corrective. We do have some interesting untapped resistance at around 66.1k, the blue box over here, but we don't have too great support towards the downside. We have a couple of lines on the chart over here, value area highs, lows, and some point of controls, but that is about it. The daily naked point of control is the strongest area of support, so we continue to observe. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.